Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing halving year returns. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So I want to go through some halving year returns for Bitcoin. I know we've been doing most of these videos on Bitcoin and some on ETH, but remember, we do have these charts for a lot of other cryptocurrencies as well. Not only cryptocurrencies, but stocks, precious metals, etc. So make sure you guys check that out. I wanted to talk a little bit about here the halving year returns so far in 2024. So there are three prior halving years: 2012, 2016, and 2020. And you can see Bitcoin's year-to-date ROI in those halving years at about what are we in May? So about this mark over here. We're only up on average maybe about 10 to 20%. But you can see that in 2024, Bitcoin is actually outperforming all prior halving years at this point in the halving year. So you can even take the average, if we look at, say, 2024 versus the average of prior election years, you can see that Bitcoin is, in fact, above the average of all of those prior election years as well. And that makes sense. Obviously, it's above them individually. It's going to be above the average. But you can see, again, that this has been a relatively impressive halving year so far for Bitcoin. Now, one caveat, though, is that in 2012, the halving wasn't until like the fourth quarter of the year. In 2016, the halving was in July. In 2020, the halving was in May. So in all of these other halving years where Bitcoin lagged its current performance, the halvings also occurred later in the year. This time, the halving occurred in April. This is also the first time we set new highs before the halving from one cycle to another. And so that could have some effect. So what we can also do is, instead of just looking at, say, the year-to-date ROI, we can also look at, ROI after the halving as well, and we will do that in a minute. One of the things, I focused mostly on Bitcoin and some on ETH, and the reason, especially at this phase of the cycle, and the reason is because there's going to be some altcoins that outperform Bitcoin, as I've said, but the dominance of Bitcoin should continue to go higher. So a Bitcoin-heavy crypto portfolio is likely going to do much better than the majority of the altcoin market. That doesn't mean there's not some alts that are outperforming. I want to reiterate that. It's just that all in all, Bitcoin continues to take back more and more market share, which is why I just continue to focus mostly on Bitcoin. You probably remember me in 2020 and 2021, I was more focused on the altcoin market than I am today. But the reason was because I was convinced that Bitcoin dominance was in a downtrend back then. And so it made more sense to talk more about the altcoin market. My perspective, though, really since 2022 began, is that Bitcoin's going to take back market share. And so I'll just focus mostly on that one, since I think the dominance of Bitcoin's going to go higher. And that's why I've just said, a Bitcoin-heavy crypto portfolio will outperform most other portfolios. And that's the reason why I tend to focus on year-to-date ROI and for just Bitcoin. And one thing to look at here with the 2024 ROI of Bitcoin, it's up about 50%. If you look at the same thing for ETH, it's only up about 30%. So, again, it shows you why being, say, Bitcoin-heavy over ETH-heavy has made a lot of sense. And again, I know it's easy to constantly say that, well, these other things will start to outperform Bitcoin. But I really do think that until looser monetary policy arrives, I think Bitcoin's going to hold up better than most, but not all, other cryptocurrencies. So the other thing I wanted to look at was ROI from the halving. So this is a little different picture, because again, if you look at year-to-date ROI, you can see that we are ahead of 2012, we are ahead of 2016, and we are ahead of 2020. But again, this is the year where the halving occurred the earliest in the year, April. If you look at ROI after the halving, you can see that we're actually slightly above 2016 now, but below the ROI following 2012 and 2020. So we're kind of in between. And if we were to take an average, right? I guess we don't have the average on these 3 cycles. Maybe we'll add that in the future. But if you just sort of eyeball this, the average, those prior returns at this point in the cycle, about 9% up, 3% up, and 9% down, and 14% up. And the current cycle is about 3% up. So yeah, I mean, you have the first cycle was 9% up at this point. The second cycle was 9% down at this point, and then the third cycle was 14% up. So we're kind of right in between, right? This green line is really just right in between at around 3% up since the halving occurred. So not too crazy. If you measure it from the April peak, right, instead of the November peak, if you look at the last cycle, it just sort of tops out there as opposed to having it go all the way out until November. So that's something to sort of think about as well. But one of the things that I've mentioned before, thinking about this year-to-date ROI stuff, is that when you look at 2023, it actually looks a lot more like the average of prior election years, prior halving years, right? This is the pre-halving year. And so I've speculated, well, since 2023's ROI looked more like prior halving year returns, what if 2024 looks like more post-halving year returns? And so then that brings you up to comparing 2024 to, say, 2013, 2017, and 2021. And when you look at those three and you take the average of prior post-election years, right? So you take the average of 2013, 2017, and 2021 compared to 2024, you can see that 2024 is underperforming it by a lot. But if you only take the average of, say, if you only take the average of 2017 and 2021, it looks like this, which looks the closest to where we are right now. But again, 2017 and 2021 were very different years. In 2021, you can see that we sort of chopped up this range in the first part of the year, and then we had a drop going into the summer, and then we went back up. Whereas in 2017, it was mostly just a slow grind for the entire year. So we're kind of in between those right now, right? We're outperforming 2021, but we're still underperforming 2017. So, we'll continue to talk about this based on the performance that Bitcoin gives, but, this is where we currently are, right? Bitcoin is about 50% up off the yearly open. It is right around where we were in 2021 at this time, slightly better and slightly less than where we were in 2017. And it's outperforming all prior halving years at this point in those halving years, with the caveat that the halving actually occurred earlier in the year than in those prior years. So definitely an interesting way to look at the market. And then also I perhaps we could at least go and look at the ROI after the lows. And if you go look at that and we just look at the last few cycles, you can see, especially if we just look at the last couple of cycles, you can see that we're actually really close to where we were 2 cycles ago at this time, but outperforming where we were last cycle at this time by a good amount, actually. If we were where we were last cycle at this time, we'd be closer to that 40 to 50K level as opposed to the 60 to 70K level. And then if you measure this from the peak, right, if we take ROI from the peak and take it out to the next peak, you can see that we are still very much ahead of where we were in those last 2 cycles at this point in the cycle. And of course, if you measure it from April, it looks like that. We really have started to veer off from this course some. You can see that we were outperforming it for a while, but now we've gone back under it. And that would be more in line with sort of the left translated peak idea. But so far it still just seems like, like it's generally following a normal cycle. I mean, this is measuring it from the April peak, and this is comparing it to 2016, 2017, right? This is comparing it to last cycle as measured from the April peak instead of the November peak. So it really all depends on how you want to measure it, right? And that, I think, is, causing a lot of disagreement amongst people. Do you measure it from the November top where Bitcoin actually peaked? Which would, if you do that, it would make the case that, like we are well above where we were at this point in prior cycles. Or do you measure it from the April top and say that this is where we are? But then you also have to wonder, okay, well, what about diminishing returns? This first cycle or the second cycle over here, topped out at an ROI of about 15, and then this one topped out with an ROI of around 3, right, as measured from peak to peak. And so this one has already gone to 1.13. You know, I mean, obviously it'd be nice to go a bit above 1.13 by the end of this cycle, but, you know, and again, you know, people always have asked, well, you know, is it a left translated peak? Is it a normal cycle? It's really, I mean, again, I think there's evidence for both views. I'm going to stick, I think for now, I'm going to stick more so with a normal cycle because, you know, historically that's just what happens. And I feel like we like to overcomplicate it. So I will stick with this chart over, say, this one. But you can't deny that there are similarities looking at it this way, right? You can't deny that. And so I think it's worthwhile to sort of keep both outlooks in mind. But that's where we are right now with Bitcoin in the 2024 halving year. That's your year-to-date ROI, your ROI after the halving, ROI after the cycle low, and ROI after cycle peak. And I just wanted to go over those. So thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.